Hello guys, welcome to our next lecture. The topic for today is business ownership, or in short, who owns the business. There are a couple of things we will learn today. We're going to look at the difference between non-corporate and corporate form of ownership. Under non-corporate, we can split into three. Under corporate, we can split into a lot of more types, but we're going to learn two. And we're going to look at the advantages and disadvantages for each. You have to master or understand these advantages and disadvantages. Lastly, a quick one on managing a corporation. The first one is a non-corporate. Non-corporate can be split into sole proprietorship, partnership, and cooperative. Here, this part here, you can see that there are sole proprietorship, there's also partnership, there's also cooperative. Our focus for today is actually on sole proprietorship and partnership only. This is where the advantages and disadvantages will come in. Cooperative is for our additional information. After that, we're going to look at corporate form of ownership here. And you have to understand something about corporate form of ownership is that according to our law, this corporate is called a company. The company is considered as a separate legal entity. This means that the company is treated as a separate person in law itself. So they have all the abilities to own asset, to sue people, to get sued, to get into debt, a couple of things, because considered as an entity itself. Under corporate form of ownership, we have private corporation. We also have public corporation. Before we move on further, there are two more slides we have to cover. You also have to understand that in most countries, even in US and in Malaysia, the most popular form of ownership is sole proprietorship, followed by corporation, and then general partnership or partnership is the least popular form of owning a business. However, in terms of sale, corporation actually have more sales compared to partnership, which is 15%, and also sole proprietorship, despite being the most popular, generate the lowest amount of sales. This slide here shows our government agency. In all countries, you would have your own government agency that would help to register a business and also a company. In Malaysia, it is called as SSM, Suruhanjaya Syarikat Malaysia, or in English, CCM, Corporate Commissioner of Malaysia. In this website, you can see there are a lot of services provided, which I hope that you guys can go and read on your own. Go and do a little bit of exploration. You can register a business. You can also register a company. You can register a business here. Yeah, you can also register a company. There would be guidelines, what form to fill in, the cost itself. You can also find guideline to consider for names, for example, the do's and don'ts for name itself. You also have limited liability of partnership, LLP. It's quite new in Malaysia. It's not that popular. We are not discussing this today. So do go and check it out, this website. Okay, we start with non-corporate. The first one that we're going to look at is sole proprietorship. Look at the definition first. We're going to read the definition. Sole proprietorship is a business that is owned and usually operated by one person. Owned and usually operated by one person. Remember, it is the most popular form of business ownership, but it is also the one that generates lower sales compared to other forms of ownership. And this person, whoever owns sole proprietorship, is also responsible for all the debts that is incurred. Couple of notes here. Register using our own government agency, SSM in Malaysia. You must register the business within 30 days of you doing the business. Register 30 days of doing the business. You also have to renew the business within 30 days of business expiry date. When you register a business, the business will have their own operating licenses, 1 year, 3 years, 5 years. Once it's expired, you have to renew it back again within 30 days. Normally, you will get an email as a reminder. You also have to give up. When you want to register, you have to give 3 names to register and then wait for approval from SSM. There is guideline in our own SSM or in your government agency, and the guideline tells you what kind of names are allowed and also what kind of names are not allowed. And to register, you can come and do on your own. You don't need somebody's help. You can go do your own, but you must be 18 years old and above. Simple as that. Now we look at the advantages and disadvantages of sole proprietorship. The first one is freedom. Since you are the one that owns and also run and operate the business, you have a lot of freedoms to decide on. For example, the business setup, when to open and close the business, the pricing, product that you want to sell. You don't need people's permission. You don't need people to say yes or no to this. You have full power for this. This might be one of the reasons why sole proprietorship is very popular. Next one is simple to form. Now, if you compare sole proprietorship versus corporation, sole proprietorship is way easier to form, to set up. And in corporation, for example, in corporation, you have to deal with various legal things. For example, you need directors, you need shareholders, you need share capital, you need registered office, constitution, board and shareholders meeting, you need company secretary, you need auditors, you need audited account, you need return filing, we have a lot more. But sole proprietorship does not require most of this. So it is quite straightforward. That's why if you want to set up as a start, this might be a good option for you. Not to mention, another advantage is the low startup cost. Compared to corporation, the startup cost for sole proprietorship is way cheaper. It requires maybe 60 ringgit plus stamp duty for 10 ringgit to register the business. It is cheap and also easy to start. And lastly, it also have tax benefit. Now, any non-corporate form of ownership have tax benefit because they are being taxed once. You are going to be taxed as a personal income. You see, in sole proprietorship, the business and also the owner is considered as one entity. So the government consider you and the business as one entity. Whatever happens to the business happens to you. If the business is making revenue, that's considered part of your money as well. If the business is incurring some expenses, that is considered as your expenses as well. You will be taxed. The sole proprietorship will be taxed as income tax once. We cannot run from tax, we will be taxed anyway. Even if you're working, you are going to be taxed. So this is what we call as tax benefit. One-time tax only. But it does come with certain disadvantages. For example, it have unlimited liability. So one of the most significant disadvantage of operating a sole proprietorship is that the business liability is also your personal liability. Therefore, be very careful. If the business can incur a certain debt and they do not make enough money, you have to pay bills even if it comes from your own pocket. Yeah. So that's a disadvantage of sole proprietorship. Another disadvantage is the limited resources. Because you are doing it alone, you are running it alone, you do not have a lot of manpower to help you out. The resources in terms of money also, financial capability also is also under you. Therefore, you only have limited amount of help, you only have limited amount of resources for you to jump up the business. This can be quite tough. Yeah. For fundraising, normally it comes from your own pocket. You borrow money, personal loan, for example, you borrow from family and friends. So still considered as limited fundraising capability compared to other types of ownership. Lastly, lack of continuity. If the owner dies, the business is considered as dissolved. Yeah, that's the main disadvantage of sole proprietorship. Next one, we look at the types of partnership. Actually, there are partnership. We can have two types of partnership. We have general partnership, we have limited partnership. The first one we discuss about general partnership. This is the most common type of partnership. In general partnership, business have 2 or more owners. In Malaysia, 2 to 20. Yeah, 2 to 20 owners. And these owners share in both the operation of the firm and the financial responsibility for their debts. So the general partnership is similar to a sole proprietorship. It is owned by more than one person, 2 to 20. And in general partnership, normally the partners may invest equal sum of money or sometimes unequal sum of money. But in most cases, partner will share the profit equally if they invest equally. If they do not invest equally, it will be based on the proportion of their investment. Yeah. So it's 2 to 20. The next one, you have to remember a couple of things as well. When you want to register as a general partnership, you also have to give up 3 names to register, and you have to wait for approval from SSM itself. Yeah. Again, a quick reminder, there's guideline in our own SSM website on what kind of names are allowed and what kind of names are not allowed. And to register, you can also do it on your own. You can just go there, you can do it online itself, but you must be 18 years old and above. All partners, or at least one partner, need to be present during the registration. Okay guys, just now we discussed about general partnership. This one we discussed about limited partnership. Now in limited partnership, there would be one person called as limited partner or silent partner. Sometimes we call them limited partner, we can call them silent partner, we can call them as sleeping partner. Yeah. But in a limited partnership, you would have limited partner, but you must have at least one general or active partner. You must have these both to become a limited partnership. Yeah. And limited partner, what do? They normally invest money only, and the amount of liability that they incur is only the amount of money that they invested. That's why it's limited for them. Yeah, the amount of responsibility or liability that they incur is only the amount of money that they invested initially. What is the purpose of a general partner? General partner is normally the one that is responsible for operating the business, running the business, and they are also responsible for liability of the business. Okay guys, next one is the advantages and disadvantages of partnership. The first advantage is the more talent and money. Remember I said that in partnership you have 2 to 20 partners. You can have 2 to 20. Imagine if you have 10 partners. Each partner can contribute their skills, their knowledge, their talent, their network, and also money. If you have 10 partners, each of them contribute 5,000 only, the business already have 50,000. That's why more partners equals to more talent and more money, provided you choose the right partners. Second, more fundraising capability. Yeah, more fundraising capability means that it will be easier for you to get additional money compared to sole proprietorship. So if you want to get bank facilities, like bank loans for example, it is easier compared to sole proprietorship. You also can add on more money by asking the other partners to top up. Plus, you can add other partners to get more fundraising capabilities. Okay. The third advantage is relatively easy to form. It is also quite easy to form a partnership, just like it is easy to form a sole proprietorship. Now, just like similar, you just go there, you fill in the form, and then you bring your partners, you or some of your partners, you pay. The payment is also quite cheap. Although there are advised that you would need a partnership agreement. Partnership agreement is not compulsory for you to register a business. Okay, you can register your business today even. Last one is tax benefit. Again, it is also similar with sole proprietorship. You and your partners will be taxed as one entity as a personal income tax. So that's pretty much it. You'll be taxed once. Yeah? And it's not that expensive. The last advantage is only for limited partner. General partner does not have this advantage. So the advantage is limited liability for limited partner. If you are a limited partner who invests money only, as a sleeping partner, you invest money for the partnership. And if the partnership or the company the business does not work, then what happens is that the business might close down. Even if they are incurred in huge amount of debt, limited partner does not have to pay for all the debts. The limited partner would only have to pay for, or the limited partner might lose the money that they invested initially. That's it. Yeah. And here the disadvantage, the problem with some partnership is that the first one, unlimited liability for general partner. You have to remember one thing. Under Section 7 of Partnership Act 1961, the decision of each partner in carrying out the usual operation of business will bind his partner as well. What does it mean? It means that whatever decision that is made by your partners, if you are the general partner, you would also be part of it. You would be responsible for it. If your partner incur a debt on behalf of the partnership or on behalf of the business, even if you don't know about it or you do not agree for it, you are still equally responsible for the debt. This is the dangerous thing. So that's why you have to choose your partner correctly. Please choose your business partner carefully if you are the general partner. The next one is lack of continuity. For partnership, if one of the partners dies, for example, one of the owner dies, then the original partnership is considered dissolved. Although there are ways around this, but the original partnership is considered dissolved. Lack of continuity. Yeah. Last one, difficult in transferring ownership. Now, if you, for example, want to transfer ownership to your daughter or to your son, you need to get the consent and approval of all the partners. Imagine you have 10 partners, one of the partners does not agree. This will create complication for you. Last one, form of non-corporate ownership is called cooperative. We read first cooperative. Yeah. Cooperative is a form of ownership in which a group of sole proprietorship or partnership, they all agree to work together for common benefit. So a group of sole proprietorship or partnership like this, they agree to work together. What this does is that they combine the freedom of sole proprietorship with the financial power of a corporation. Yeah, and in Malaysia, in order for you to create a cooperative, the member of the cooperative must be at least 50 active members. 50 active members to create a cooperative, and all the members would actually have equal profit through dividend if the cooperative was able to make profit. So you have created a cooperative, you start a project, do something, and it make money, they pay you equally using the dividend. Yeah. And one more thing is that in cooperative, they would have annual grand meeting, we call AGM. Annual grand meeting is when everybody come in and meet, and during that time, normally the members of cooperative will vote for their board of directors. That's all you need to know for cooperative. We are not discussing advantages and disadvantages for this. This next part is corporate. When we talk about corporate, there would be shares involved. This now, all of them does not have share, but here corporate will have shares. Yeah, stock or shares. Let's read through the definition of corporation first. Corporation is business that is legally considered as an entity separate from its owner and is liable for its own debt. So it means that in corporation, you would have a corporation, you would also have the owner. They are separate. Unlike partnership and also sole proprietorship, the business and the owner are one person. This is separate entity. The corporation, they are like responsible for their own debts, not the stockholder. Yeah. So to register a corporation, however, you will need assistance of what we call as company secretary. Again, I repeat, to register for corporation, we will need the assistance of company secretary. Company secretary is actually a service, and these people, what they do is that they help to register your business, but they also have other functions. They can advise you, they can keep documentation for you, they can advise you how many shares, how to issue more shares. So price of company secretary, normally they differs. They are based on the service that they provide. Yeah? And please find a good company secretary so that your life would be much easier. In corporation, we can split into two types. For today, we learn two types. We have private corporation, we also have public corporation. Now, the most common form of corporation is actually what we call as private corporation, or also closely held. Normally, we call as private corporation. In private corporation, the stocks are actually stocks. They are only held by a few people, and the stocks are not available for sale to the general public. So the controlling group of stocks may be a firm's family, maybe the management group, or even the firm's employees. Yeah, and most smaller corporation fits their profile. So under Malaysian Company Act 2016, at the end of the company's name, we will put Sendirian Berhad, SDN BHD. SDN BHD or Sendirian Berhad is considered as a private corporation. An owner for a private corporation is only between 2 to 50 people only. So private corporation, the owner would be 2 to 50 people only to own Sendirian Berhad or private corporation. Yeah. However, under the new Company Act 2016, it is possible for us Malaysians to have a company with one sole director and also one shareholder, which both of them can be the same person. So you can be the sole director, you can also be the individual shareholder. Previous, the old Company Act 1965, you need 2 directors and 1 shareholder. Different now. And also, that's pretty much it that you should know for private corporation. For public corporation, however, when shares are public corporation, when shares are publicly sold to the public, then it is called as public corporation. Stock or shares widely held and available for sale to the general public. Next one, we're going to look at the advantages and disadvantages of a corporation. The first advantage of corporation is limited liability. Now, if you are using a corporation, whether it's Sendirian Berhad or Berhad, public or private company, what you do is that you would have shareholder. As a shareholder, you invest, let's say, 10,000 to a business, and you own 10% of the business, and the business or the company didn't work out. They incurred millions of, say, loss, they incurred millions of debts. You as a shareholder, worst case scenario, lose only that 10,000. You don't have to pay for the debt. Even the board of director does not have to pay for the debt. The employee does not have to pay for the debt. The business is responsible for their own debts because the business is considered as separate entity. Remember, because separate entity, they have to pay for their own debt. Of course, they can also buy and sell things. Business can sue, the company can sue or be sued at, but you don't have to do that. Yeah. Even if the company is being sued, you as a shareholder does not have to pay for the suit. Yeah, you are pretty much covered. The next advantage is continuity. As the company, for example, in the company there are shareholders that come and go, change of shareholders. The board of director might change, top management might change, employee might change, some leave, some just join in. Doesn't matter, whoever leave, whoever join in, the business doesn't stop. The business still continue. This is what we call as continuity. Even if any of the shareholders die, the business does not have to stop, even for one single day. They can still continue. This is another advantage of corporation. Next advantage of corporation is also called as stronger fundraising capability. What it means is that for businesses under corporation, what they do is that in order for them to get more money, first of all, if they are going to get funding from government, an agency or bank, or even if they want a loan bank, for example, it is found that it is easier for them to borrow money compared to sole proprietorship or partnership. That's the first thing. Especially if they are public corporation, it is easier for them to borrow money. Second, they can also get more money by shares, because that's how they get the investment anyway. They can issue more shares and they can get more money, depends on the share itself. Yeah. Some of the disadvantage of corporation. The first one is the corporation can be taken over against the will of their management. You see, if you buy the shares to a certain percent, more than 50%, you own the company. Doesn't matter if the owners or the managers like it or not, it doesn't matter. Whoever have the most shares, they can use tender offer, for example. If they own certain amount of shares, they can already own the company. Yeah, that's why the company can be taken over by their management. Next is double taxation of profit. Okay, this part here, if you remember sole proprietorship and partnership, they are being taxed once as a personal income tax. For corporation that have share, they will be taxed twice. The first one, they will be taxed out of profit. So it is actually taxed out of the company's profit. First tax. And then second tax will be for the stockholder or the shareholder. The shareholder or stockholder that get profit out of it will be taxed again, twice. This is why we call as disadvantages. And lastly, it is also quite complicated and also expensive to form. Yeah, you see, for you to form this, you need a couple of things. Incorporating and operating a company, corporation for example, comes with initial startup cost, the incorporation cost, the recurring cost, for example, the cost of engaging a company secretary, auditors every year. These are all quite complicated and they can be quite pricey every single year itself. Okay guys, this is our lecture code for today. Please type in. Thank you. This is some other types of corporation. You can see here, we have closely held, publicly held that we discussed today. Yeah, this one we did not discuss, not for our chapter, not for today. Yeah, you can pause and watch and read this if you want. Okay, next one. Summary. This is a quick summary for everything that I just explained just now, so you can look at this through. please pause this video and just quickly read the summary. This will be very beneficial for you. Okay guys, this is the last part. We call this as corporate governance. To manage a corporation, you need a couple of people to help in terms of making decision and also accountability. So we have shareholders, we have directors, we have other managers in corporate to make corporate decision and also be accountable for the decision that it makes. Okay guys, corporate governance is actually established and it involves three distinct bodies. The first one is the stockholder or shareholders, and these are the owners of corporation. They are the one who buy stock or shares, and they own the company. And from that, we also have board of directors. The board of directors is a group selected or elected by stockholder. So this stockholder will elect board of directors, and these people, what they do is that normally they oversee corporate management. Yeah, they oversee corporate management. And we also have corporate officers here. Okay, the corporate officers are top managers and they are hired by the board of the directors to run the corporation on day-to-day basis. Okay, so we have the shareholder, which is the owner, who will elect the board of directors that oversees corporate management, and board of directors will then hire top management for the day-to-day basis. Yeah. Although you have to remember, although board of directors they do oversee the operation, they normally do not involve in day-to-day operation. Yeah, that's why they hire team of managers, these people here, to run the firm. Okay, and this team, although called officers, they are normally headed by CEO, Chief Executive Officer, and this Chief Executive Officer, CEO, is responsible for overall performance. Yeah, and then of course we also have other types, which is president, we have also vice president, we have other chief marketing officer, chief IT officer, stuff like that. But this is what is needed in a corporation: stockholder, board of directors, and also officers. And then below officers, of course, you have the employees. That's all for today, guys. Thank you so much. Okay, we are done for our lecture today. See you again next week. Bye.